Good morning. Welcome to Trading Hour. I am Reema Tendulkar, and with me are Sonia Shenoy and Pavitra Parekh. And girls, there has been a bit of a turn in the markets in the last 15 minutes. That intraday on the Nifty should come up. We were holding up in the green. We were up close to about 0.3%. But in the last 15-20 minutes, the markets have turned and we've completely flattened out. The Nifty is now at 17,900, so hovering slightly below that 100-day moving average, a level that we were tracking very closely. Banks are right now at least up in the green by a smidge, a fractional gain of 0.1%. But again, we've seen the gains getting whittled down in the Nifty banking space as well. Stocks which have lost ground, it's HUL, NTPC, Reliance Industries. Some of these intraday charts will mirror the fall that we are seeing in the frontline indices. IT continues to hold forth. The Nifty IT index is up nearly 1%, with names like TCS having completely erased those post-earnings losses that we had. So TCS on Monday, the closing price was 33.19. Then yesterday, the markets, TCS had a pretty rough fall. But from there, TCS has seen a pretty good recovery and now trading above the levels that it was prior to earnings. BPCL is another one which has made a pretty good up move. BPCL has now surged to the high point of the day, and it is the top Nifty gainer. What are you watching, girls?
Oh, well, as you said, this is a market whose texture has definitely weakened, right? You can see it over the last many days. And I think the next level to watch, if the 100-day moving average breaks convincingly, is the December 26th low, which was 17,774. So that becomes a crucial support for the market. And overall, the texture has weakened. There were fresh short positions that were opened in the Nifty and the Bank Nifty yesterday. And there seems to be no reason for the market to scale up above these levels. It is a very tight range, but we are at the lower end of the trading range. And every time, at least in the past, if a level gets tested a couple of times, then it definitely breaks on the downside. And that's what we're seeing with the 100-day moving average as well. Even for FIIs, it's been 13 days of selling now. So since the texture of this market is weakened, once again, every sort of rise is being used as a selling opportunity, and that's what you've seen in the market today. But lots of numbers. Tomorrow you have HCL Tech, there's Infosys, and then through the course of the week there's HDFC Bank, Wipro, etc. So I guess that will be the defining factors for the market. Lots of global headlines as well. There's the US inflation data. But amidst all of that, this market continues to be really volatile.
Yeah, really volatile. And today also, Reema was talking about the turn that we've seen right now. We've seen more than a few turns, right, ever since the morning. By the way, all of this while the Asian markets are holding absolutely steady. So ever since the morning, you've seen the Hang Seng market. It's actually up 1.4% now. Nikkei is up 1%. You've seen the Dow futures, stay in the green all through the morning. So there's no real volatility that we're seeing in Asia. But our markets are definitely, seeing a bit of that. What's doing well is, of course, today, like we pointed out, IT and PSUs, which saw a big cut yesterday. On the downside, do keep your eye out on what's going on with some of the Adani stocks. Today, of course, Adani Enterprise, a bunch of them are down. Those will all come up for you. Adani Enterprises this month has already seen a 6.5% cut. So do keep this entire space on your radar. The future group of stocks also suffering a pretty big cut right now. So that space is something that we're watching out for. In terms of cues, it is all earnings, the CPI data from everywhere. Some of the top economies of Japan, US, India, China, all of them going to put out their CPI data, this week itself, and then the earnings season. So we will track that closely. But let's now talk about the individual names which are in focus in today's trading session. We have Bharti Airtel, which is the first stock on our radar. The stock is losing in trade. It's actually the top loser on the Nifty. This posted downgrade coming through from JP Morgan. Nimesh is here with the details on this one. Nimesh?
That's right, and that's the reason why Bharti is the biggest loser today, as JP Morgan has today downgraded the stock to underweight from overweight, and they've sharply cut the target price to 710 versus 860 earlier. Now, three specific reasons why why JP Morgan has downgraded Bharti Airtel today. One, higher than expected capex. Two, delayed price repair, and three, lack of 5G monetization. In fact, JP Morgan believes that Jio's focus on high-end consumers would mean that there is a higher capex for Bharti Airtel to defend the market share, and competitive pricing in 5G would delay the free cash flow and return on invested capital. Now, at the current market price, JP Morgan believes that the stock is baking in a modest FY24 estimated capex, 10% tariff hike, and a continued ROIC expansion. All three looks difficult in the current environment, and hence a big downgrade on Bharti Airtel to underweight from overweight, and they've sharply cut the target price now to 710.
Okay, well, that's on Bharti Airtel. But let's also take a look at some of the other stocks in the broader markets. You have lots of stocks hitting fresh 52-week highs despite the fall that we've seen in the market. CG Power is one of them. It's at a fresh 52-week high. It had a pretty strong run last year as well. And something like a transformers and rectifiers also sitting at fresh highs. And then you have something like a JSPL in the metal universe that's at a fresh high as well. But Rima, you want to take that discussion forward that Nimesh had on the tariff situation in the telecom space and how there could be a lot of competition kicking through?
Absolutely. So Nimesh said one of the reasons for the Bharti downgrade is perhaps that the street is not going to be seeing the tariff increases that they're hoping for. And that's the big elephant in the room when it comes to the telecom space. Are we going to see tariff hikes in 2023? And here JP Morgan believes we are not going to have any tariff increase by the telecom operators in this calendar year. They're saying it will be difficult for the companies to do another tariff hike because the last tariff hike, which took place in December of 2019, or 2020, 2 years back, had resulted in a lot of churn for the telecom operators. So they're saying that right now, the focus of the telecom operators is to make sure that they have the 5G rollout, they're aggressive on the 5G rollout, they get that early mover advantage, which is why the companies right now at least are not going to be looking at a tariff increase. They're saying they don't even expect premium pricing for 5G right now. Right now, it's only Bharti and Reliance Jio which have launched their 5G operations in select circles, and here only they're offering 5G at the same price of 4G. And they're saying, JP Morgan believes that till there is a critical mass adoption of 5G, we're not going to be having premium pricing for 5G. So that's what their expectation is. That contrary to street expectation, there is going to be no tariff hike by the telcos, Bharti as well as Reliance Jio in 2023 because these companies are focused on their 5G rollout. And even for the existing 5G subscribers or the 5G subscribers who onboard through the course of the year, the companies are unlikely to charge premium pricing because the telcos will wait for a critical mass adoption. And they're saying that if a tariff hike doesn't come through in the next 6 months, the street is going to be very disappointed. Their waiting period, their patience will run out, and we are likely to see downgrades for the telecom space, especially Bharti Airtel. If we do see a tariff hike, according to them, the quantum, the extent of the tariff increase will remain a bit uncertain.
All right, Rima, thanks a lot for getting us all of those details from the JP Morgan note on the telecom space as well as the tariff hikes. But the next space that we're looking at is the steel stocks because steel companies are in focus after JP Morgan in its latest note believes that more price hikes are on the way. So Nigel is here to fill us in with the fine print. Nigel.
Well, that's right. JP Morgan believes there are more price hikes that are likely to come about. They highlight the fact that Chinese prices, well, that had moved to closer to around $500 per ton. That's bounced back in style to around $620 per ton. And some deals are also happening at around $635 per ton. They believe that demand is likely to bounce back post the new year. Remember the price increases. Normally, it's a seasonally strong period, that November, December odd period. But this time around, it's got a little bit delayed. But they believe the best is yet to come in terms of pricing. They highlight that, yes, domestic prices are up by close to around 1,500 rupees per ton. But now the landed imported steel is coming in at around 60,000 rupees per ton, while the domestic pricing is at around 56,000 rupees per ton. So they see a good case that pricing can go up. Steel prices can move up by around 3,000 rupees per ton in the next 2 to around 3 months odd. They also take on board that, yes, coking coal costs are higher, which could limit the margin expansion from here on. But they're expecting good earnings recovery for the steel stocks. So that could explain why the stocks do well.
Okay, thanks a lot for that. So all the steel companies looking pretty good this morning. Let's slip into a quick break. Up next, we'll discuss what's buzzing in the commodity space with Manisha Gupta, our commodities editor. Stay with us. Welcome back. Still very quiet for the market, but one sector or segment that's underperforming, apart from telecom, of course, Bharti is down 3.5%, is some of these banks. So there's a lot of banks that are under pressure now. Yes Bank, South Indian, J&K, Union, IDBI Bank, all down anywhere between half to about 2% odd. And remember, these banks had rallied quite a bit. So maybe some profit taking is what you're seeing in this pocket. The volumes are pretty much on the higher side as well. Bank of Baroda is another one. So has the PSU Bank rally come to an end? Only time will tell. But for now, some indications are that it has. But let's go across to the commodity space now. Manisha Gupta joins in. And today is going to be a pretty sweet discussion. The focus is on sugar. Manisha, over to you.
Thank you for that, Sonia. Well, we have seen the sugar prices continue to perform quite well in the previous year as well, and 2023 has opened on a positive note. Actually, overnight, we've seen global sugar prices gain up between 2 to 2.5% for both the varieties. The raw sugar prices for 2022 did close a year as a fourth straight year of gains there. Actually, when you look at the last year, we saw the raw sugar prices gain up by more than 7%, and the white sugar prices, which are trading at $550 a ton right now, also gained up by nearly 13% in the previous year there. We did see prices go down to a 2-month lows as the year was ending, and that was because the funds were taking profit. But that sell-off also seems to have dried up right now, and the funds seem to be coming back into the market in the lower side. That clearly has been supportive. Also, when you look at the Indian demand, that seems to be getting better now. Makar Sankranti is a time that India does consume and buy a lot of sugar. And this is also a period that after a gap of nearly a month, the Indian wedding season also kickstarts. So the markets are anticipating some demand coming in because of that too. The Brazil political unrest and an await of a fuel policy there are a couple of other factors which have kept the premium on prices there. Having said that, the Indian sugar exports is something that the markets is keeping an eye on. Remember, 6 million tons is what is allowed, and we do understand that while all of that may have been contracted by now, what the actual exports stand at 1.7 million tons, the rest is expected to be exported by the month of March there. Also, when you're looking at the sugar output itself, we are looking at good numbers from India, Brazil, Thailand. So that is what seems to be keeping a lid on the prices right now, but a good sector and a good start yet again for 2023.
All right, Manisha, thanks a lot for getting us all of that on the sugar move. But with that, we're going to get into a short break now. The market is just a little bit in the red. So when we come back, we'll tell you how to approach this very volatile session. We'll have Mitesh joining us. We'll also bring you some fresh trading bets. Welcome back. You're still tuned into Trading Hour on CNBC-TV18, and we're once again seeing some cuts come through for the markets. It's just a little bit in the red right now, and the mid-cap index is also trading with a cut of around 30 points. So, you know, that entire volatility that we've been seeing play out through the morning, that just continues. So let's tell you how to approach this kind of day of trade. Mitesh joins us for exactly that. Mitesh, good morning. This entire day has just seen us, you know, swing between gains and losses. In fact, that's what we've seen for the past few days, right? I mean, we have one up day, one down day. How do you approach it on a day like this? And would you take a call on just the index level?
So you're right. I think, you know, this is a market which is not giving you directional move, but yet contracting within range. If you talk about the slightly broader perspective, I think it's 17,800, and that level has been tested on an intraday basis about 4 times since 23rd of December. And on the upside, 18,250. While I think, you know, the last pullback which we got day before yesterday was around 18,150. So I think broadly 18,250, 17,800 is the bigger range. 18,150 is the immediate pivot. Having said that, therefore, I think trading the index, you would want to wait for some kind of signal or a breakout or breakdown below these levels which I mentioned. So till then, I think on the index, you might see this choppy one up day, one down day, but a choppy consolidation kind of a movement. And therefore, trading may not be the best idea over here on the Nifty per se. On the stock side, I have one buy and one sell. Manappuram Finance is something, you know, which is breaking out nicely. So that's on the buy side. And Bharti is my sell call. So on Manappuram, I would recommend a buy with a stop below levels of around 120 for targets of around 128. While Bharti, which has opened with a gap down, that's a sell. Keep a stop just above 780 levels and look for targets of around 740 on the downside.
Right, Mitesh, thanks a lot for that. Bharti Airtel, a sell call over there despite the fall that we've seen. So perhaps more downsides lined up for Bharti. That's the word coming in from the technical expert. But we learned from sources that SEBI has written to the AMFI with respect to a circular on development of passive funds. Sonal is here with the details on that. Sonal, over to you.
Thanks a lot for that. Well, yes, it's an update on passive ELSS funds. This circular came back in May 2023, and now SEBI 2022, and now SEBI has written to the AMFI where they have allowed them to actually issue passive ELSS funds as well, along with active open-ended ELSS funds. Now, launch of passive ELSS funds in this case can only be done after stopping any further inflow flows into active open-ended ELSS funds as well. Apart from that, these two schemes have to be merged after 3 years of closing active ELSS scheme subscriptions as well. Now remember, as per SEBI rules, they did not earlier allow both passive and active ELSS funds to function together, but now with this particular letter that they have written, it will be allowed together provided they do not have any more subscription in the active scheme as well. Now, as I said, SEBI earlier allowed mutual funds to launch passive ELSS schemes, and as per SEBI classification rules, any mutual fund can have only one scheme per category as well. Now, this paves way for more funds coming into passive ELSS funds, provided there are no other flows coming into active ELSS funds. And SEBI had actively received feedback from stakeholders, after which they have made this change in terms of passive flows. And this, of course, paves more way in terms of flows into passive open-ended ELSS schemes.
All right, Sonal, thanks a lot for getting us all of the details on this latest letter by SEBI to the Association of Mutual Funds. But with that, we're going to get into a short break. As we do that, here's something that you, our viewers, must take note of. CNBC-TV18 and the National Stock Exchange have come together to promote investor awareness through a special campaign, Informed Investor, that empowers you to make the right decisions with your money. Now, as a stock investor, I'm sure you've seen stock tips through SMS, emails, YouTube videos, Telegram, and several other social media platforms. But did you know that wrongdoers use these channels to pump and dump stocks as well? Well, I would advise you not to act on it blindly. A smart investor always conducts adequate research, analyzes risks, and consults only SEBI-authorized investment advisors to make an informed investment decision. You should go one step further and report any unsolicited stock tips to the exchange. Soch kar, samajh kar, invest kar.
बहुत बहुत स्वागत है। विकसित भारत के निर्माण में मध्य प्रदेश की भूमिका बहुत महत्वपूर्ण है। आस्था, आध्यात्म से लेकर पर्यटन तक, एग्रीकल्चर से लेकर एजुकेशन और स्किल डेवलपमेंट तक एमपी अजब भी है, गजब भी है और सजग भी है। साथियों, मध्य प्रदेश में ये समिट ऐसे समय में हो रही है जब भारत की आजादी का अमृत काल शुरू हो चुका है। हम सभी मिलकर विकसित भारत के निर्माण के लिए जुटे हुए हैं। और जब हम विकसित भारत की बात करते हैं तो ये सिर्फ हमारी एस्पिरेशन नहीं है, बल्कि ये हर भारतीय का संकल्प है। मुझे खुशी है हम भारतीय ही नहीं बल्कि दुनिया की हर संस्था, हर एक्सपर्ट इसको लेकर आश्वस्त दिख रहा है। फ्रेंड्स, द IMF sees India as a bright spot in the global economy. The World Bank says that India is in a better position to deal with global headwinds than many other countries. This is because of India's strong macroeconomic fundamentals. OECD has said that India will be among the fastest growing economies in the G20 group this year. According to Morgan Stanley, India is moving towards becoming the world's third largest economy in the next 4 or 5 years. The CEO of McKinsey had said that this is not only India's decade, but India's century. institutions and credible voices that track the global economy have unprecedented confidence in India. The same optimism is also shared by global investors. Recently, a prestigious international bank conducted a survey. They found that a majority of the investors preferred India. Today, India is receiving record-breaking FDI. Even your presence among us reflects this sentiment. Friends, this optimism for India is driven by strong democracy, young demography, and political stability. Due to this, India is taking decisions that boost ease of living and ease of doing business. Even during a once-in-a-century crisis, we took the path of reforms. India has been on the path of reform, transform, and perform since 2014. The Atmanirbhar Bharat Abhiyan has imparted greater momentum to it. As a result, India has become an attractive destination for investment. साथियों, एक स्थिर सरकार, एक निर्णायक सरकार, सही नियत से चलने वाली सरकार विकास को अभूतपूर्व गति देकर दिखाती है। देश के लिए हर जरूरी फैसले उतनी ही तेजी से लिए जाते हैं। आपने भी देखा है कि कैसे बीते 8 वर्षों में हमने रिफॉर्म की स्पीड और स्केल को लगातार बढ़ाया है। बैंकिंग सेक्टर में रिकैपिटलाइजेशन और गवर्नेंस से जुड़े रिफॉर्म्स हो, आईबीसी जैसा मॉडर्न रिजोल्यूशन फ्रेमवर्क बनाना हो, जीएसटी के रूप में वन नेशन वन टैक्स जैसा सिस्टम बनाना हो, कॉरपोरेट टैक्स को ग्लोबली कॉम्पिटिटिव बनाना हो, सोवरिन वेल्थ फंड्स और पेंशन फंड्स को टैक्स में छूट हो, अनेक सेक्टर्स में ऑटोमेटिक रूट से 100% एफडीआई की परमिशन देना हो, छोटी छोटी आर्थिक गलतियों को डिक्रिमिनलाइज करना हो, ऐसे अनेक रिफॉर्म्स के माध्यम से हमने इन्वेस्टमेंट के रास्ते से कई रोड़े हटाए हैं। आज का नया भारत अपने प्राइवेट सेक्टर की ताकत पर भी उतना ही भरोसा करते हुए आगे बढ़ रहा है। हमने डिफेंस, माइनिंग और स्पेस जैसे अनेक स्ट्रेटेजिक सेक्टर्स को भी प्राइवेट सेक्टर के लिए खोल दिया है। दर्जनों लेबर लॉज को 4 कोड्स में समाहित करना भी अपने आप में एक बहुत बड़ा कदम है। साथियों, कंप्लायंसेस के बोझ को कम करने के लिए और उसके लिए केंद्र और राज्य दोनों के स्तर पर अभूतपूर्व प्रयास चल रहे हैं। बीते कुछ समय में करीब 40,000 कंप्लायंसेस को हटाया जा चुका है। हाल ही में हमने नेशनल सिंगल विंडो सिस्टम शुरू किया है, जिससे मध्य प्रदेश भी जुड़ चुका है। इस सिस्टम के तहत अभी तक लगभग 50,000 स्वीकृतियां दी जा चुकी हैं। साथियों, भारत का आधुनिक होता इंफ्रास्ट्रक्चर, मल्टी मॉडल होता इंफ्रास्ट्रक्चर भी इन्वेस्टमेंट की संभावनाओं को जन्म दे रहा है। 8 वर्षों में हमने नेशनल हाईवे के निर्माण की स्पीड दोगुनी की है। इस दौरान भारत में ऑपरेशनल एयरपोर्ट्स की संख्या दोगुनी हो चुकी है। भारत की पोर्ट्स हैंडलिंग कैपेसिटी और पोर्ट टर्न अराउंड में अभूतपूर्व सुधार आया है। डेडिकेटेड फ्रेट कॉरिडोर्स, इंडस्ट्रियल कॉरिडोर्स, एक्सप्रेसवेज, लॉजिस्टिक पार्क्स, ये नए भारत की पहचान बनते जा रहे हैं।
All right, welcome back. Well, Aurobindo Pharma is on the US FDA's radar. CNBC-TV18 learns that the regulator is inspecting the drug maker's plant in Andhra Pradesh. Ekta is joining in. Ekta, what are you picking up from sources?
Hi, thanks for that. Well, it's probably one of the first few inspections which are taking place by the US drug regulator in this year. So we do understand from sources at this point in time that the US FDA has begun inspecting one of Aurobindo's units, which is basically located in Andhra Pradesh and manufactures oral solid dosages. We do understand it's a routine inspection because it hasn't been inspected for the past 4 years. There are no outstanding US FDA issues on this particular inspection, and this inspection is expected to have begun earlier this week. Now, in terms of the total contribution to sales, it's around 2 to 3% of total sales. So not that much in terms of contribution, but it would be important in terms of the overall supply pipeline when it comes to the oral solid dosages and Aurobindo's supply to the US. So we did reach out to the management. They do not have a comment on this story. This is something which will probably be tracked over the next couple of days to understand what the outcome would be.
Thank you very much for that. Let's invite Jyoti Vardhan Jaipuria, founder and managing director, now Valentis Advisors, on the show now. Jyoti, morning, and thanks so much for joining in. Your read on the market is last year, any bad news in the economy was read as good news. But now as we enter 2023, as recession fears grow, bad news in the economy will be read as bad news. Can you tell us what the implications are from a market point of view in terms of expectations and returns?
Yes, Seema. So, last year was all about the Fed, all about, inflation going up and Fed hiking much more than what the market thought. My view is that we are probably coming closer to the end of the Fed hike. We'll probably have hikes in the next 2 meetings. And then, Fed will probably go into a long pause. The market believes that they will start cutting by the end of this year. The Fed says no at the moment. But what the market's focus will shift to is the economy and earnings. Because I think, earnings in US could probably be negative. Earnings will be downgraded across the world. GDP also will get downgraded. And that's where the fear will shift to that. Are we getting into a recession in US? Are we getting into slower growth everywhere in the world? And that's why my thing is, like, so far, even now, I think over the next few weeks, any bad data on the economy will probably be positive for the markets. People will take it positively. But as we move into the course of the year, we'll find that bad data on the economy is actually bad news for the market and not good news.
Okay. Jyoti, a happy new year to you, and thanks for being with us on the channel. Looks like it's a year where we have to grapple with a lot of things, right? Higher interest rates, lower growth, high inflation. Amidst all of this, where do you see places to hide? Which are the spots where you think could, forget about delivering alpha. It looks like a tall ask at the moment, but at least spaces that could outperform the market.
Yeah, happy new year, Sonia. So, one is we still continue to like the banks. They've done well last year. So, we're not going to get the same sort of returns from the banks which we got in the last year. But I think that's one area which will continue to outperform even when these results come. A lot of the earnings growth in India is going to come from the banks. The other place where things will be good, I think, from a stock market point of view, is sectors which got hurt last year because of the high commodity prices. So essentially, you had very strong top line growth in some sectors, but margins totally got eroded because the input costs were very high. This year we'll probably have the reverse. Top line will probably slow down a bit, but margins will normalize. Margins will be very strong, and so you'll see earnings growth coming. A lot of these stocks are down 25-30% from where they were a year ago, and that's where things will be good. So just to give you one example, it's probably cement is one example where last year a lot of input cost pressure, and this year input cost pressures have eased. So just because of the cost cut, we could see like a 200 rupees per ton increase coming in cement EBITDAs.
Okay. Mr. Jeparia, good morning and thanks for joining us. This is Pavitra. What do you think of the IT space now? I mean, we just had TCS post earnings, not too bad at all, but they're not really providing much clarity on what's going to happen in the future. The rest of the earnings will also come through this week, but do you think that this is a good time to maybe start buying into IT because we've seen such a big correction, or do you think there's lots more pain in this space?
Yeah, Pavitra, so like right from a year ago, our theme has been just avoid the global plays and focus on the domestic plays because there's more visibility on the domestic plays. We know that the economy is doing fairly well. That will slow down a bit, but not too much. On IT specifically, you've seen like valuations come up substantially for where they were at the peak. But even then, the demand environment is cloudy, especially if we get into a recession in the US. Then, in the second half of this year, a lot of them will start saying that we don't have visibility on the order book. And that's the reason we are trying to avoid it at the moment. No need to rush into it.
Jyoti, if emerging markets are going to outperform the Indian markets, how do you expect foreign flows to come into India? Because anyway, we've had 7 good years on the trot. There is a case to be made for other emerging markets to play catch up where the valuations are far more reasonable. And then you've got fundamental triggers like China reopening, which has implications for the Taiwanese markets because of the semiconductor linkages, Hong Kong, etc. Do you expect India to see, how do you expect foreign flows into India this year?
Yeah, so see, Rima, there are two things on the foreign flows. One is, the absolute and the relative. So last year, if you see, India outperformed, but foreign flows were hugely negative. We got like close to $16 billion of outflows last year. This year, I think what will help emerging markets is basically that the dollar has probably peaked off and the dollar will weaken. It will not strengthen like it has for the last 8-10 years. So to that extent, in general, emerging markets will probably do better than developed markets. So when that happens, like everybody tends to get more flows because more flows are going to emerging market. Just remember, India now is the second largest weight in the MSCI Emerging Market Index. So to that extent, there's some flow which comes naturally. Second is within emerging market, we'll probably get lesser flows than what we deserve because of our weight. Because one is last year, like you said, it was one of the strongest performing markets. And second is if you look at valuations, we are like extremely expensive relative to the whole emerging market peer. We are trading at over 100% PE premium to emerging markets. So to that extent, you'll probably see some of the flows going more towards countries which are cheaper countries which did badly last year. So I think India underperforms the emerging market, but it still we may still get better flows than we got last year just because the emerging market pack comes more into focus.
Jyoti, thanks for joining in. We've run out of time, but not out of questions. We will chat again very soon. Thanks for being with us on the channel. But
Thanks.
all roads are leading to the Auto Expo 2023. It's underway after 3-year hiatus. The Auto Expo is back. My colleague Parikshit Luthra is right there. He has the management of Ashok Leyland with him. So let's cut straight across. Parikshit, over to you.
Well, yes, we are at the Ashok Leyland stall here at Auto Expo 2023, and with us are Mr. Shenu Agarwal, the Managing Director, the new Managing Director of Ashok Leyland, and the CTO, Mr. N. Saravanan. Thank you very much for joining us. 7 alternate fuel technologies showcased by Ashok Leyland at the Auto Expo. If I can ask my camera person to begin from there, that is the CNG vehicle, which has been showcased. You have an LNG truck, you've got a hydrogen fuel cell vehicle, and more CNG trucks which have been showcased, and electric vehicle trucks as well. Mr. Agarwal, give us a sense of what does this say about the roadmap for Ashok Leyland over the next 5 years?
See, the roadmap is very, very clear because the future is going to be different, and therefore we want to be prepared for the future. And that is our play at the Auto Expo as well. We have nothing from diesel or old fuel here. Everything is future. Right, starting from CNG, LNG, and electric, and hydrogen, etc. right? So
out of these technologies that you're showcasing, which one would you like to bring to market probably in the next 1 year or as early as possible?
Yeah, so I would ask Doc to.
The question depends on the ecosystem availability. We believe CNG ecosystem is building up quite fast. So is LNG. So we expect the CNG and LNG to come at a quicker pace, followed by EVs, of course, especially in segments where there's intracity applications where it's possible to put charges much quickly. Followed that with maybe the hydrogen-based vehicles, both the fuels and the hydrogenized. So for us, CNG, LNG, and battery electric vehicle in some segments, followed by the hydrogen-based vehicles, is what we see.
Mr. Agarwal, could you give us a sense, as we move ahead and show our viewers what else is happening here at the Ashok Leyland booth, could you give us a sense of the kind of investments you're making in these different technologies? And if we were to ask you to divide it in terms of a percentage, could you explain us what will be the allocation?
Yeah, so without going with a specific number, I would say that about 70% of our capital expenditure on R&D is happening on the alternative technologies.
70% is going towards R&D technologies.
Yeah.
Right. I would also like to ask you about the current share of alternate fuels, green fuels in your portfolio. How much would you like to increase that in the next 5 years?
Yeah, as Doctor also said, depends on a lot on how the ecosystem develops around these technologies. But we want to be ready. We want to be ahead of the curve. We want to be the first in the market as far as possible. And as far as we have a supportive ecosystem, we want to be there in the market. I would say the journey would start with the smaller vehicles first, and there is a lot of discussion in the industry around like 2030, even the smaller or the mid-sized vehicles would be a large part would be alternative fuels. So we just want to be ready for that. We just and we are displaying our technologies here today.
As we see these technologies, which are some of the products you're likely to launch in FY24?
For example, you see the Boss EV. This is a segment where you're starting to see electrification happen quite quickly, particularly short point-to-point hauls. You can actually see EVs coming to picture. So this would be probably one of the first vehicles from a non-CNG LNG perspective coming to picture. The Boss EV, which is from 10-ton to 18-ton platform, could be one of the first products to come into the market.
Right. If I were to ask you about some of the policy clarity that you need from the government at this stage to have a clear roadmap, what would that be?
I think the government has been quite active in the last couple of years. We do have reasonable amount of clarity, other than small noise once in a while, but there's reasonable clarity in terms of what the government wants to push in terms of electrification, also in terms of recent hydrogen policy. There is clarity. Now the question of investments from not just from OEM perspective, investments from the ecosystem perspective. For example, if we take electrification, there's a need for high power charging infrastructure, not just charging for the cars. So that's the challenge. How does one go about it? I think we'll see. The ecosystem will evolve around.
Mr. Agarwal, do you feel that when it comes to heavy commercial vehicles, large buses, heavy trucks, there the hydrogen fuel cell would possibly make most sense?
Yeah, that is what the thinking broadly is in the industry, and that is why we are displaying some hydrogen technologies as well. So when it goes to the bigger sizes, more tonnage, I think that is the way it is going to be.
But the rollout will depend on the availability of the fuel and how the market.
That is what, yes, we believe the ecosystem will have to be quite supportive, but from our side, we want to be just ready for the change.
Okay, my final question as we end, how do you expect to close FY20, FY23, and maybe some of the challenges to growth that you see in the next fiscal?
Yeah, so FY23 has been really very good for us so far, and I hope the last quarter would be more, would actually be better. We have a good tailwind because the industry is moving very well. Industry is about to reach maybe its peak this year or next year. And on top of that, we have been able to recover a lot of our market share that we had lost. So we are, from the point of market share also, we will be pretty much at our highest ever by end of this year. That is what we are hoping.
All right, Mr. Agarwal, Mr. Saravanan, thank you very much for joining us here on CNBC-TV18. So that was the Ashok Leyland management here, giving us a sense of their future roadmap through what they have showcased here at the Auto Expo. Back to you.
Okay, Parikshit, thanks a lot for that, and looking forward to a lot more interactions that you have lined up with the top brass of the auto industry there. That's Ashok Leyland saying they want to be prepared for the future, and they're unveiling a whole host of new technologies like electric, CNG and LNG vehicles. Let's slip into a short break. More on the markets coming up on the other side.
Welcome back. It's the IT stocks which are supporting the markets today. The Nifty IT index, as you can see, is up over 1%. So there is a stark outperformance. You know, for a very long time, we've been talking about how the revenue growth estimates for IT companies is expected to moderate in FY24 and FY25. As the macro uncertainty prevails on tech budgets, the high base effect will weigh. So currently, the street is estimating a 6 to 8% kind of FY24 dollar revenue growth. And this would compare with the double-digit revenue growth in FY23. But the other point to note is that even though the revenue growth is going to be between 6 to 8%, the EPS growth for next year and the year after that, FY24 and FY25, is going to be in double digits. And at the end of the day, your valuation is based on your earnings, on the EPS. And that's because even as the top line is likely to shrink compared to FY22, FY23, margins are likely to expand because we've started seeing the supply side situation ease very considerably. If you remember, even TCS said that attrition on a quarterly annualized basis is down 600 basis points. As attrition comes down, the use of expensive subcontracting costs will come down. So the street is now penciling in that margins are likely to improve in FY24, FY25 to a small extent. Not greatly, but margins will expand, and that will support a double-digit EPS growth in FY24, FY25, and that in a way could support the valuations for the Indian IT companies. Well, that's just one update that we wanted to put forth on the Indian IT space. And even though revenue growth is estimating, the EPS performance for Indian IT companies is still likely to be in double-digit. Flat for the markets, out of time on trading hour. Thank you for watching. Stay tuned. Halftime report is up next.